Good morning. Good morning, everyone. Hope you had a wonderful weekend. Let me make sure my mic is open. We did. We had an awesome weekend. Let's get things teed up here for us. Once again, what we want to try to do here is get a system or a trading robot on something that's going to be fairly active so that you can see it during the time that we're together. I think I've got a pretty nice little program. We'll see. We'll see. It's trading 5 micros, still on point and figure. We're going to run it with you from 11 to 1. Now, I'm going to try not to do any intervention, and I better get it on, right? So I haven't even turned it on yet. I want you to see it right from its onset. So let's go do this, and let me fire it up. And like I say, it's not going to be super busy, but and if I do any intervention, I'll let you know. So we get this thing activated. Bear with me. And she is now armed. Okay, so any trades that go in and out right now will be handled by the machine. And let's take a look at Swing Machine. Right, we love to keep Swing Machine up. And what are we looking at? Um, let's put the VIX on a daily. Can we do that? That okay? Let's do that. Let's put it on a daily. Look where she is, man. I mean, she's really. I mean, it's. I know. I know what this feels like, right? It's like, man, nobody cares about anything. No, they don't. They don't care until they do care, but they will care. But we can come up with all kinds of things. But let's just look at where we are. So the market's at 20. The VIX can still go lower. It's been lower, right? It still can. The ES on which it is measuring, because there's a separate VIX for all these markets, there's even a gold VIX, so this is really the most appropriate one. We're at 70. So there's a little bit of weakness here, a little bit of divergence. It can resolve itself either way. Right now the VIX could still compress lower. If peace breaks out with all the Europeans coming to visit Trump and everything else, I'm not so sure about that. I think everyone wants to get their picture taken with the guy. Um, and the S&P can certainly go higher. It's been up here, right? So we are scraping up at the highs on a position basis. So if you are we draw a distinction between swing traders, well, let me put it this way, investors, which we invest, nothing wrong with that. Investors, swing traders, option traders on an intermediate basis, maybe even a daily type of swing trader, and then intraday. There's a difference, right? I had a neighbor once say to me, I don't even know how he knew what I was doing. I don't even know. To this day, I don't. But he said something like, "Oh, you're a day trader." No, do some day trades. I'm an intraday trader. Oh, that's even worse. Oh man, I since moved away. I'm not sure what happened to him, but um, it is what it is. What it is. All right, so we're gonna 71 days, 71 days, 67 days. The VIX, turns down in response to the market. 71 days ago, on May 7th, when there was so much noise about this and noise about that, it lifted off at 57.04, and it's been straight up ever since. And yes, one measly mini contract, just one, you'll be up 38 grand. A couple of call contracts, probably up even more than that. And there's an old saw, an old proverb, don't fight the tape. And now intraday, we it's not that we're fighting the tape. We're not fighting the daily tape. We're just trading the action intraday. But on a daily swing trading basis, if you're in there, trying to bet on the dark side for the last 71 days, it may have been a hard way to go. But that said, we are getting up in here. We are getting up long in the tooth. So if you decide to go that route, you want to define your risk using options, and you've got to stay nimble, right? You got to stay nimble, and there's many different ways to structure your options. It isn't just calls, just puts. There's other ways you can literally put time on your side. Everyone complains about time decay. You can put time on your side, which we certainly discuss in Q. All right, so let me put this back to a 5 minute, because we're going to trade intraday here, or keep an intraday view. And yeah, they're pushing the VIX still down, and they're still wanting to push this market up, particularly the Russell. So the program is armed. I've got to get my nose into the development center. We're working on a number of things, as we're doing all the time. I'll try to periodically take a peek, which I'll do right now. Let me go here and look. If anyone has any questions, or you want us to plug in any market, we can do that. Oops, where did my thing go? Try to get a view on YouTube. Now on YouTube you are delayed. There's not much we can do about that. They get you on about a 30-40 second delay, which means it's like, I think it's like 1,000 milliseconds. Yeah, 1,000 milliseconds in a second. And so we'll punch up the analytics on YouTube so we can see your questions. We don't see any, so I'm going to let you watch, and we'll see how we do, right? And we are mechanical algorithmic traders, right? So I'm not trying to hand out the fish. I'm not going to be pointing to a chart. This moving average is doing that, and this stochastic's doing that, and it's between 10 and 10:30, and if I stand on one leg and stand on the other leg, and all this nonsense, or just bend your ear with all this chatter. All I can tell you is, here on the 5 minute, if you had gone long at today is the 18th at where's our time? Uh-oh, dang it! I'm supposed to be remembering this, or the machine is. So let me go get the time. It keeps I forget to save it. So let's do this. Now I'm going to have to make room for it. All right, so I can do this so we can see the time. Sorry about that. And percent return is a little bit misleading there. The percent is the difference there that you see, is the difference between the entry price and the current price. That is not the percent return, because these are leverage products, and you can do exceptionally well, realizing a much greater percentage, right? So, all right, so we have it in place. We look at the VIX. The VIX turns down at 8:15. That's an indication, still an indication, that the market has this buoyancy. It wants to float. It wants to go up, right? It wants to float. Fluid dynamics. And the 5 minute went long on the ES at 8:50. The NQ is kind of fighting it a little bit. The 1 minute isn't doing much. It's underwater a little. And the NQ on a 5 minute is trying to go down. So we might just kind of keep our powder. Well, we're not trading it, but I'd probably keep my powder dry here a little bit and let this work itself out. Typical Monday morning. A lot of cross currents. A lot of people trying to get out. A lot of people trying to get in. A lot of people, just a lot of cross currents on a Monday morning. But with that VIX doing what it's doing, I still think this market still wants to kind of push up. The big trade here this morning is the gold trade, still selling into this at 655 and turning down, up 1500. Silver. I think these dips in gold and in silver at least on a daily basis, are opportunities to, on a position basis, to be buying. I think silver. We said this about silver when it was in the 20s. Remember? Um, and once it gets above, this $40 mark, 40, 41, 42, I think it could make a rapid race to 50. Um, but we'll see. It's got to get above 40, and gold is going to have to, you know, find some support somewheres down below 3,500, make another run to 3,500, and try to push through that area. Now, I think if the Fed cuts interest rates, this whole conversation. Um, Let me just share this. This is just an opinion. Don't bet on it, okay? Because I don't. When we're trading intraday, none of this matters. But there is this discussion about interest rates and the short-term rates. Looking at it purely from the yield curve, I would say the appropriate thing to do is to cut short-term rates, at least right now, right? Unless um, because the front end of the curve is really just too high for where the rest of the curve structure is. And what do I mean by that? Let's just go and see if we can take a peek. I got to remember where we are here. Okay, so we're in number 27. So let's go back. Let's just take a look at the yield curve, and I'll tell you what I mean of what's going on. It's got nothing to do with really the intraday. It's much too macro for that. Where is that guy? Where'd it go? Here it is, right here. Not skew, yield curve. So here's the yield on the 5-year. So if you buy a treasury and give your money to the Federal or the Feds, you'll get 3.861 on an annualized basis. Give it to them for 10 years, you get 4.343. 30 years, 4.9. So that's nice and normal and healthy. What isn't healthy is this one. This is what's got Trump bullshit. He wants to see, but it is below the 10-year, right? It is below, and that's what's keeping this positive. What he doesn't like is it's higher than even the shorter term money. And the Fed really doesn't, on my view, doesn't want to cut that bitch. Doesn't want to. When they like to cut into weakness. But Trump's contention is you're going to create weakness. You got to cut it. And if he cuts it, I don't know what it'll do here. The thought is that these will go down, but they may not. They may even go up. They may even steepen. And I could certainly make a case for either one. I'm inclined to think that they steepen. And the banks start making money hand over fist. And it could light up the market. It absolutely could, because people will rush out and stop buying cars again. They'll stop buying houses again. And they will stop borrowing again. And it'll light things up. What the Fed might be concerned with is like, wow, we're cutting into, a frothy market when the market's at its highs. And we're going to will basically be stimulative again. And we might get some inflation or perceived inflation, and that's what could drive gold and drive silver, and so that is an issue. Now the Fed might be waiting. Now they would have thought, I think they would have thought that that this market was going, the economy was going to slow, and maybe the market would come in, and then they could cut into a slowing economy, a slowing market, and that would be normal and maybe not as inflationary, because they do refer to, they absolutely do pay attention to the market. There's no question about it. Oops. Uh-oh. Hold on. What is that all about? Hold on. Okay, sorry about that. So, um, where was I? So, there could be, I think what the Fed would rather be doing is cutting, on a slowdown, but there doesn't seem to be a slowdown, right? Um, and we can slide back. I'm sorry to the markets here. We're on number 27 here. Um, Now this whole thing of the tariff as well. I think Trump is wrong on this. I do. I know it doesn't appear to be now, but I do think he's got it wrong. Um, this taxing. And I heard a real interesting from a person a lot smarter than me, and just floated out some numbers. And he said that our imports, the United States imports, total about 3.1 every year, $3.1 trillion. And that these tariffs, these international tariffs, are averaging not 2 or 3%. They're upwards of 20%. 20%. So if he's taxing these imports of 3.1 trillion, 20%, you are in fact looking at $600 billion annually coming into the coffers. And he's bragging about that. Look how much money I'm raising. Look how much money I'm raising. Um, well, somebody's paying for that. Either the consumer's paying for it or the producers, wherever they be, in China, wherever, they're paying for it. And at some point, they're either going to raise their prices so they don't have to pay for it, or they're doing it now. And then at some point, in my view, the people will slow down buying them. They won't buy that Mercedes Benz. They won't buy that foreign car. They won't buy, Swiss chocolate or whatever it is, or a Swiss watch. They won't buy it, and it will slow the imports down. But when he slows it down, he won't be taking in as much money. And I think he could cause. I think it could cause, a worldwide slowdown. Now, I do find it interesting if you've watched online, that guy Ray Dalio, who founded Renaissance Capital. No, excuse me, not Renaissance, Bridgewater, not Renaissance. That was Simon's. Um, they are the largest hedge fund in the world, and it's coming out today. They have completely liquidated all of their holdings of Chinese based companies that are listed in the US. I don't think that's, irrelevant. I think that's pretty relevant to the bigger picture and the macro. These markets have tacked on about an extra 25% from where they were. Very, very similar to 1999. Very, very similar. That's what they did in the end. We thought the bubble was going to break in 1999. There was reasons for the liquidity. It didn't break until after 2000. I'm inclined to think, maybe we're going to get it turned down. Maybe he's going to get through this year. But boy, I got to tell you, I just think that these markets and this economy and everything, I do think it's on very, very on tenterhooks. But But from an investor, you can still make money in good and bad times. You've got to be just much more selective. You got to be, hedging your bets. You have to be. You absolutely have to be, right? I mean, this isn't, the bottom generational sell 2008, 2009. I mean, we're 15 years into this, if you are an investor. If you're a swing trader, you need to be paying attention to the water flow. Which way is this river flowing? How fast is it flowing? What are we doing, right? Where's the money flowing? Intraday is intraday. And so we can see the Nasdaq trying to push down. It's very weak. ES is starting to push down. The VIX isn't responding. Not yet. Now, if these do stick, you'll see the VIX come up. The VIX comes up, we will turn down. I think it's going to be very telling, as it is every week. Mondays love to, the new money comes in. They push it into everyone's IRA accounts, 401k accounts. That's what they do. It's an old game. And then they pull the plug and we see where we are on Tuesday afternoon. We see where we are at the end of the week. Susan and I, we did place put contracts, just flat out put contracts on the S&P. Nothing crazy, nothing disproportional to what we do. Please understand, I will flip out of them if I have to. That we trade, right? We're traders, right? So I'm not trying to get it right. Or let me put it this way: I am trying to get the trades correct, but I'm not trying to be right. I'm not trying to. So that little macro discussion or observation that we have, I'm not. That's interesting, but I'm not. We're not making a decision to buy or sell based on any of that. I'm just not. You know, Nope, not at all. So it's always a little dangerous to have those types of discussions. Kind of why it's just academic. It's just an academic. It'll be interesting. It'll be a parlor game that you can say, in 1978, when there was that big ass snowstorm, I was on Route 128. You'll know where you were when the blizzard of '78 came in and hit Boston. I was on a college campus, chasing Susan around. But you'll know where you'll be. And it will be a doozy. Now there's all sorts of headlines, there'll be no recession and no more recessions. Yeah, okay. Perpetual money machines, maybe, huh? I don't think so. So the volatility always does this. Low volatility, which is what this is a measure of. And this is just 5 minute now, but even on a daily, it's down in here. Low volatility begets high volatility, and high volatility begets low volatility. And where we swing from one side to the other, to the other, to the other, it's just, it's like a tide. It just is. So just like a surfer, you paddle your little board out there and you wait for a wave, and on you go. And we're doing something very similar. It's just that I'm not going from screen to screen to screen, scanning and looking for the waves. We have machinery doing that, and it just makes for hopefully an easier paddle and an easier ride. But we'll see, right? So it's running. It hasn't picked up on anything yet. I'll be here. Enjoy. We will, for better or for worse, right? We're going to let you watch up to 1 o'clock. Then we need our resources and full attention, but we'll try to do this. As we gear up going into the fall, in Florida, it's hard to believe the kids are back. They're back in school. The Northeast, it's the Wednesday after Labor Day. I'm not sure in other parts of the country, but they're going back. So fall is coming. In Florida, we look forward to it because we want to get rid of the heat. Oh, geez, Abby, big watchdog, probably UPS guy. Sorry about that. But the markets will be very busy. We will be very busy. Q schools are already busy. And we're trying to accommodate everybody that wants a shot at doing this. A big part of Q School as well is figuring out, how does this fit into my life? Does it fit in? Do I have the skill set? We're going to set up the constructs so that you have an opportunity to do that, right? We're actually giving people an opportunity, and I'm just more comfortable doing this, to say, no, this isn't something I want to do. Right? So we won't even let a person sign up as an annual until they do that. I would rather they go through the Q School, learn a bunch, and then make a more informed decision for them and a best decision for themselves to say, something, Don, you're a nice guy. I learned a lot, but I don't think I do want to do this. Oh, okay, better, be better. Of course, we hope you have a great experience, um, and feel like you want to, go forward. It's an uncertain game. The market is uncertain. The outcomes are uncertain. We have to live with that uncertainty day in and day out. And if it's something you like, if you like that uncertainty and you can thrive with it, and beautiful. That's one of the things. But maybe it isn't. That's why we don't suggest that this is for everybody, right? Everybody can do this. No, no, probably not. Probably not. Especially they've been inoculated with, you know, not really even seeing the market day in and day out, but inoculated over the years with, this fallacy, that fallacy, and and it is what it is. One of the questions that that I always had when they would say, "Oh, you can't time the market. You can't make any money selling." Well, if that's true, Susan, if that's true, Susan, who the hell's doing all the selling every day when the dot com was, selling off? Who's doing that? I mean, if that's true, why isn't everybody just buying the dip? Why isn't everybody just plowing in? Now you could say, "Oh yeah, well, if you had stayed with Apple, you know, you'd be a multimillionaire." Oh, okay, yeah, you would be, because Apple went from whatever it was back in the '90s to like $3 a share. But what if your money was on JDS Uniphase? What if your money was on Sun Microsystems? What if your money was on Global Crossing? What if your money was, I mean, I can go down and down and down and down. There were hundreds, thousands of them. They don't even exist anymore. Your money, your retirement, and there are people who are no longer with us anymore. They just became pixie dust. So, today, yes, the big dogs, Nvidia, big dog, huge dog. Oh man, never gonna happen to Nvidia. No way. No way. Oh man, it's the most owned. I know, I know, I know, I know. Probably won't. Probably won't. Probably be around for 50 years. And everyone's going to get rich on Nvidia. Okay, yeah. Said the same thing about Lucent Technologies. What's Lucent? It was the most owned darling. It was a spinoff of AT&T. All the telecommunication things. That was the big thing. Telecommunications. Like plastics, from that movie, The Graduate. Remember the guy said, "Oh, you got a son. You got to get yourself involved in plastics." Every generation has these memes. Actually, today it's not even generational. I mean, it's like every 6 months there's a meme. From social media to, oh God, AI to whatever. I mean, they just that's how they sell the shit. Stuff it with everybody. So it is what it is. But Lucent was the most owned, and I had a ton of it. I did, and it took a correction. I dumped it. The broker didn't like that. Well, why are you doing that, Don? Because they're down and their earnings are decelerating. Their quarterly earnings are decelerating. Their annual earnings are decelerating. I want out. Dump it. Well, and while you're at it, start dumping the other stuff too. Whoa, it's just a Lucent problem, Don. No, it isn't. Their earnings are decelerating. Their margins are getting squeezed. And so if you're not watching that on your individual, you want to play the individual markets and the individual stocks, you better learn to watch that stuff. Because trust me, the big hedge funds. So you got to ask yourself, why is Bridgewater dumping all the Chinese listed stocks in the U.S.? What's that all about? All of them. They're not worried about, oh, you can't time the market. You got to be in. They dump $1.5 billion of them. Mm-mm. We're here ready when you want to get started. Our Q schools will, in all likelihood, end this year in early November. And then what'll happen is we will be booking, reserving, space and time um, on a first come first serve basis for the beginning of the year. So there's not a lot of time. We're talking it's August, September, October. I mean, basically a couple of months, kids. So it's up to you. And it's going to be, and I think when the volatility rolls back in, I know we've been in a volatility crush for years and years, but we can get in an expanded volatility and a regiment day after day, week after week, for months, for years. And the only ones who will be making money when markets are making new highs, everybody makes money. Anybody and everybody. Starting to read a story about kids in high school doing this and doing. Everyone's making money. Everyone, just buy. But when we get into a highly volatile regiment, high volatility, that's where the men will be separated from the boys, the women from the girls. Who has game, who doesn't, and it will be brutal. And so you don't want to be. I mean, you want to play. You want to learn the game as early as possible, but you want to be, ideally ready. Now is the time. Now, when the volatility is low, to learn your skill set and learn what you can and can't do. And if you can't do it, then you don't. You do something else. You go buy a Dairy Queen, and nothing wrong with that, right? Right. As I said, I got a college buddy that bought Dairy Queens. He's doing great. Selling ice creams. It's great business. We'll be here. Have fun, everyone. The machine is on. So any trades, we'll see if we get any between now and 1. See how we do. So let's just take a look. We punched up at 11 o'clock, right? 11 o'clock. Um, at 8:15, the VIX is turned down. It's still down there. So that's got to give one a little bit of pause. I'm not, trying to influence anyone's decisions here. Just trying to describe what Swing Machine is showing. At 11:30, just moments ago, the 5 minute Swing Machine, the 5 minute goes short at what price? 64.63. Right here now. Um, the NQ is at 11:15. So we'll see what happens here. The Dow is holding in there. I don't give much importance to the Dow. Quite frankly, if the markets are going to sell off, you sometimes you see the Dow rise because they're trying to put their money in safe harbor. Some of these funds, some of these mutual funds, there's all kinds of participants in this market. Banks, insurance companies, healthcare companies, they have their money in here, and they don't have the luxury of doing what we do, right? They've got to, and by charter, some of them have to be invested. So they might move big blocks of money into, a what is perceived to be a safe harbor, right? And they may do it over time. They're not going to do it in 5 minutes. Can't turn a big aircraft carrier, a big convoy around like that, right? But when we're doing this, we're nothing more than a gnat to them, right? They got a big aircraft carrier, they got a big convoy that they're trying to navigate, around this world, around this planet. We're on wave runners, you know. That's it. Even if you get dozens of these contracts, you're still nothing but a wave runner. Um, the Russell being long here, stubbornly long, is noteworthy because the Russell can be the speculative class, or it is the speculative class, and it can be an indicator in and of itself of risk appetite. So the fact that the Russell is still long and the VIX is still short, be like, well, we'll have to just wait and see how this plays out, right? And in the meantime, our strategy is running, and it may or may not enter. I'm not gonna force it, right? And it's what I chose to run. Um, you get to be the quarterback. You have all these different programs, you have all of these different markets, you have all the different intervals, and you have, your um, capital, your risk capital, and you get to play the game how you want to do it. You want to run quarterback sneak, quarterback sneak. You can certainly do that. You get to, to play the game. So whatever we can do on that end to help you learn to play your game, not mine, but your game, that's what we're going to try to do. Right? We're a mentorship. It isn't an apprenticeship. I'm not going to be handing you the trades. I'm not even going to be handing you the trades. We will do it side by side during Q School a little bit, but we're trying to, pass the baton to you. I hope that makes sense. Enjoy, everybody. See how this plays out. Good afternoon, everyone. It is 1 o'clock, and we're going to need, unfortunately, to turn down. We haven't had any trades, right? It's a very tight range. We haven't had any, and that's okay. And let me just take a peek. Yeah, we just didn't have any during this hour. Can't manufacture them. I'm not going to force it. We still see, they just don't want to let go, and what we need to see is this VIX, come up. I am Bagadon. This is Stock Market Caddy. Swing Machine and these tools can do a number of things. They can help you get in. They can help you get out. They can help you stay out. Sometimes that's the most valuable thing, is to be able to stay out. Don't put your money at risk in a sloppy tape. Other times, when they get you in, they can help you stay in. And you can make more money than you ever dreamed in a shorter period of time. It happens. It does. We want to play for the positive outliers. That's what we want. We don't want negative outliers. We didn't have any trades, I'm sorry, between these hours, but we'll see. We'll try to punch up a little bit tomorrow, a little bit later in the week. We do these YouTube sessions to create some curiosity, to invite you to visit stockmarketcaddy.com and to pose any questions you might have. Thanks.